Second, regarding to China banks, we do prefer big four banks this year, mainly due to much more stable fundamental or much more stable dividend per share. So besides all of those like fundamental issue, they have relatively more stable fundamentals, they have more stable fundings. I think SOE banks, especially big four banks, their dividend contribution is quite significant to China's central government fiscal income. For example, the dividend contribution from the SOE banks accounted for or equivalent to around like 10% of China's government deficit. So that makes China banks try their best to report a relatively stable net profits, and also they would keep the payout ratio at 30%.
Shujin, the other part of this story is loan demand. Is there any sign when you do the channel checks with the big banks that loan demand is starting to show some signs of life, given all the stimulus action that we have seen?
Very good question. In overall, I would say that unfortunately we don't see significant recovery in credit demand. Well, on one hand is that for corporate loans, in second quarter, China regulators stopped asking banks, prohibit banks from like providing deposit rate higher than the deposit rate cap, and also the banks were prohibited to lend loans higher with yield lower than the treasury yield. So due to the impact for that is that credit growth declined quite a lot in the second quarter, and also it was mainly due to the weak demand from the corporate side. From the household side, on one hand is that the property sales remains quite weak. It still continue to decline year on year. That makes banks' new issued mortgage decline quite a lot. But on the other hand, as you just mentioned, that we do see some impact from the stimulus. For example, more subsidy for household to purchase cars. So in the past 1 month, we see the decline year on year in the car sales started to smooth or more moderate. So which may help with the overall like loan growth in the consumption related loan.